United Overseas Bank, or UOB for short, is the first of the three Singapore-listed banks to release its financial results for the second quarter, as well as for the first half of the financial year 2024, ended 30th of June early this morning. As for the other two Singapore banks, OCBC will be releasing its results tomorrow morning, and DBS will be releasing its results next Wednesday evening. In this video, you will find my review of UOB's latest financial results, key financial ratios, as well as its dividend payouts to shareholders. Before I begin, a quick introduction about the bank. Most of us Singaporeans should be familiar with the bank's operations in Singapore, but do you know that UOB also has banking subsidiaries in countries such as China, Indonesia, Malaysia, Thailand, and Vietnam? Today, the bank has a global network of about 500 offices across 19 countries and territories in the Asia Pacific, Europe, and North America. However, its focus is in the ASEAN region. In the next two slides, I will be looking at UOB's results recorded for the second quarter, as well as for the first half of the financial year 2024, compared against the results recorded in the respective periods last year. First, on its second quarter results, UOB's total income fell by close to 2% as a result of a 1.5% and 21% decline in its net interest income and other non-interest income respectively. Particularly for its net interest income, it was due to a moderation in net interest margin to 2.05% in the current quarter under review from 2.12% last year. For its other non-interest income, it was due to a decline in other trading and investment income on lower swap gains and valuation on investments. On the other hand, net fee and commission income saw a 18% jump as a result of a rebound in loan-related and wealth management fees, along with a double-digit growth in its credit card fees. Moving on to UOB's financial results for the first half of the year. Total income inched down by about 1% as a result of a decline in its net interest income and in its other non-interest income by about 2% and 9% respectively. For its net interest income, the decline was largely due to a fall in net interest margin from 2.13% recorded in the first half of the financial year 2023 to 2.04% recorded in the first half of the financial year 2024. For its other non-interest income, it can be attributed to lower swap gains and valuation in investments. However, its net fee and commission income saw a 11.4% improvement as a result of increased lending and capital activities, alongside higher wealth fees, as well as stronger card fees on an enlarged regional franchise. When it comes to reviewing a bank's key financial ratios, I will always look at three things. Number one, its net interest margin, which is the difference between how much the bank earns from its lending activities and what it pays out on deposits and other borrowings. Number two, its return on equity, which is a measure of how much profit the bank is able to generate for every single dollar of shareholders' money it uses in its businesses. And finally, number three, its non-performing loans ratio, which is a measure of bad loans. Of course, you will want this ratio to be as low as possible. Also, I will review the ratios recorded for the current quarter under review against the ratios recorded in the previous quarter 3 months ago to find out if they have continued to remain resilient or showing signs of weakening. Here is a comparison of UOB's key financial ratios recorded for the second quarter of the financial year 2024 compared against ratios recorded for the first quarter of the financial year 2024. Two things to highlight here. Its net interest margin has inched up by another 0.03 percentage point from the previous quarter to 2.05%. While it is a positive, but with the US Federal Reserve likely to make its first interest rate cut in September, I foresee the bank's net interest margin to slowly decline either from the fourth quarter of the year or from the first quarter next year. Next, its non-performing loans have continued to remain stable at 1.5%, which is another positive. In fact, it has been maintained at this ratio since the fourth quarter of last year. The management of UOB declares a dividend payout to their shareholders on a half-yearly basis Once when the bank releases its results for the first half of the year, and another when it releases its results for the second half of the year. For the first half of the financial year 2024, a payout of 88 cents was declared, which is a 3.5% improvement compared to last year. The payout amount also represented a payout ratio of about 51%, which is in line with the management's guidance to maintain a dividend payout ratio of 50%. If you are a shareholder of UOB, do take note that the dividend payout will go ex-dividend on 12th August, just after the National Day long weekend, with the payout date on 23rd August. A quick summary here of UOB's latest set of results. In terms of its financial results for the second quarter, as well as for the first half of the year, it was largely a muted one in my opinion, as far as its total income and net profit attributable to shareholders are concerned. Total income fell in both periods as a result of a decline in net interest income as net interest margin moderates, while other non-interest income fell mainly due to lower swap gains and valuations in investments. Other financial ratios, when compared against the previous quarter, continued to remain stable, with net interest margin up slightly to 2.05% and non-performing loans ratio stable at 1.5%. In my opinion, it is a positive. Finally, its interim payout increased by 3.5% to 88 cents per share, representing a payout ratio of about 51%. With that, I have come to the end of my review of UOB's latest financial results for the second quarter, as well as for the first half of the financial year ended 30th June. If you find the review useful, I would greatly appreciate it if you can give this video a like, and at the same time, consider subscribing to this channel so you will not miss out on any videos I will be publishing ahead. Thank you for watching, and I look forward to talking to you again in the next video.